Hey, I'm Jay with Registered Real Estate Advisors in Spring, Texas, and it's Whiteboard Monday. Today, like always, somebody asked me a question and it gives me an idea for Whiteboard Monday. They were just talking about how their house note went up, and they thought they had a fixed rate and they didn't think their house note should ever go up. So I explained to them that they had an escrow account. And this right here, I'll just explain real quickly. I got a couple of examples of what kind of loans you might get here. On a $100,000 home, you got $2,400 in taxes and $1,200 a year in insurance. So what we have here is an 80% down conventional loan. And I just wanted to do this one. We're figuring about 4.5% on your interest rate, and it's a 30-year note. So your principal and interest is $405. This is what never changes. This never changes if you have a fixed rate loan. This, on the other hand, taxes and insurance, they move around. Insurance you can handle. You can go out and get different quotes from different insurance agencies, and you might be able to save a little bit on your insurance. I was just using hypotheticals. Taxes, file a homestead exemption, make sure, and protest taxes to make sure you're not getting overtaxed. Those are two things you can do to try to control it. But here you can see $405 a month, principal and interest, $200 a month taxes, $100 a month on insurance, and you got a total here of $705. Now, this person could have they did put 80% down on this loan, so what you could do is ask the lender not to escrow. And when you ask the lender not to escrow, all this goes away right down here. You don't have this anymore. What you have is a simple note of $405 a month. Now over here on the FHA loan, these loans are very low down payment loans. And what you end up with here is the same thing. You're gonna do a lot less on your mortgage. I still figured 4.5%, but you're doing a lot more on your mortgage. Your principal and interest at 96.5% down. Total loan is 3.5% down. It's $494. Once again, the taxes, the insurance, but look at this. We have mortgage insurance here. Mortgage insurance is the premium that you pay in order to get that low down payment. This actually does go down and eventually disappears from your note. It goes away after 5 years or after you hit 78% loan to value on an FHA, whichever one of those takes longer. So if you can hit your FHA note with a little extra, you can eliminate this, thereby taking care of that. It'll go back down below $800. So anyway, there you have it, just a little bit on what goes in a monthly note. I hope that helps you out, and I'd love to help you get into your own home. Right now, the interest rates are good. Quite frankly, 4.5% seems like it might be a little high compared to what my lenders have been telling me. So if you're interested in getting a home and you want to get out of that rent cycle, why don't you call me? I'm Jay Richardson with Registered Real Estate Advisors in Spring, Texas. Thank you very much for joining me.